Hi, this is Dustin back with Dustin's Dollars, and today I'm going to be talking about AITX, about its market capitalization and its share classes, going through sort of how I understand them. This is in part of me continuing to research AITX stock. Um, and it's a little bit confusing. It doesn't seem like the market capitalization as represented online on either on the websites that I'm finding are correct, at least as far as I think it should be. So I wanted to go over that today. Before I get started in earnest, I want to remind you that I am not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I may own investments in some companies I discuss in this video. Namely, I do have a long position in Nightscope. I have no current position in AITX. What I'm presenting today is actually part of my research on AITX stock and considering of whether I would invest in or not. So basically this video should be for your entertainment only because I could be wrong about everything that I say in this video. You need to do your own research before making any investment decisions. All right, so that being said, when I look online, I see market capitalizations. Let's see, maybe make this a little bit bigger. This is on otcmarkets.com, which I think is a canonical source for the outstanding shares for AITX because this is the market that they trade on. And it lists the market cap here as about $84 million. It also, here on Yahoo Finance for AITX, it lists the market capitalization as about $77 million. I do not think either of those are correct, and I'm going to show my work today on how I think that the market capitalization is somewhere more around the $500 million, $600 million dollar range. And I will go through that. So let's get into it. First, to sort of get to where I am at with the market capitalization calculation, first you have to understand the share classes of AITX. And it was a little bit confusing to read through all of this, but there are four classes of AITX shares. There's the common stock, which is what is represented in the OTCmarkets.com and the Yahoo Finance, where they're getting it about that $80 million figure. That, I believe, is roughly the market cap of the common stock. However, there are a couple other share classes. There is the Series E preferred stock, the Series F convertible preferred stock, and the Series G preferred stock. And let me go through those. So first of all, you're familiar with the common stock, I assume. This is what is traded on the OTC. As I said, I do believe that the OTCmarkets.com is a canonical source for how many current shares of common stock are outstanding. And that shows you that there are about 4.7 billion shares outstanding as of today, as I make this video on February 21st. And there are 5 billion of these shares that are authorized currently. And so the price of these at the last traded price is 1.77 cents. And that does, if you multiply that out, give you, I believe, the market cap right here that they show on otcmarkets.com. So no surprises really there. But moving on to the Series E preferred stock, these are not publicly tradable. There is about 4.3 million of these shares authorized and about 3.3 million of them outstanding. These do not have dividend or liquidation rights. However, this is the key piece of what the Series E preferred stock gives the holders. This is a quote I believe I copied directly out of the 10K. The outstanding shares of Series E preferred stock have the right to take action by written consent or vote based on the number of votes equal to twice the number of votes of all outstanding shares of equity instruments with voting rights. So, again, let me remind you, I'm not a financial professional, not a legal professional, but my interpretation of what that means is from the way that I read this, this is saying the Series E preferred stock is going to hold 2/3 of the voting rights of the company. No matter however many other classes of shares exist and are held by whoever, the Series E preferred stock will have 2/3 of the voting power. And as far as I can tell from the most recent filings, all outstanding Series E preferred stock is held by Steve Reinhardt. Sorry if I mispronounced that, I apologize. He is the CEO of AITX. So what that says to me right now is that regardless of what other stock exists now or is issued in the future, as long as this Series E preferred stock exists in its current form and is still only held by Steve in terms of all of the outstanding shares, then he will hold control of this company. He has a supermajority, right? I think I'm not sure exactly which votes would need maybe more than 50% and might need 2/3, but he holds 2/3 of the company's voting rights, as far as I understand it here, regardless of whatever other stock exists. So that is a Series E preferred stock. I did not in my eventual market cap calculation that I will get to, I did not include the Series E preferred stock because they don't have any dividend or liquidation rights. However, it is useful to understand that as you sort of understand the ownership structure of the company. So I'm going to skip the Series F for a second and go on to the Series G preferred stock. These are also not publicly tradable. There are 100,000 of these shares authorized, and there are none outstanding as of now, I believe. These do not have dividends, liquidation rights, or voting rights. They are not convertible to common stock. I guess I should have also said that I don't think that the Series E, I don't believe I listed it here. Let me go back to a second. I do not think the Series E preferred stock are convertible into common stock or any other shares. So Series G, also not convertible to common stock. What the Series G preferred stock does give the holder is it is redeemable at the company's option at $1,000 per share. And this was used for management objectives. Let me skip ahead. I don't have them here. I thought I made a slide here. Sorry. So there are some management objectives for the CEO, for Steve Reinhardt's, and by achieving those objectives, it was written into the employment agreement with him that he would be granted Series G preferred stock. A couple other things with the Series G preferred stock is that the company is responsible for gross upping the award value. That I believe was a direct quote out of the filing, and I believe what that means is that if these are redeemable for $1,000 per share, that the company will not only give the $1,000 per share, but also then give pay the taxes, right? Give enough money so that the person receiving the $1,000 actually gets $1,000, not $1,000 and then they owe tax on it. Therefore, they actually get less than $1,000. If I understand correctly, I was looking at this. It looked like what was actually given was about $13.20 per share. So the estimated tax, it was looks like it's about 32%. And in the past year, 1,500 of these shares were issued to the CEO, and that resulted in almost $2 million in charges to the company. And there's actually $479,500 that remains that is likely to be paid. I would imagine this is likely to be paid before April 15th this year, right? Before taxes are actually due. And most of the remaining management objectives that are tied to the Series G shares being granted are tied to a stock price. The minimum of those, I believe, was around the 10 cent per share of common stock mark. So you can form your own opinion on how likely you think that is to be achieved by the end of the year. But there is one additional objective, which was if RAD receives an order for 50 units from a single customer, that would grant Steve an award of 500 shares of Series G preferred stock. So that if that still happens before the end of their fiscal year, which I think is at the end of February. So, but again, I have not finished my research. Maybe this has already happened in terms of the company. But that was the one outstanding objective that looked like it had not, at least in the filings, had not yet been met and resulted in a grant of the Series G shares. So now I'm going to get into the Series F preferred stock, because this is the complicated one, and the one that I think actually plays a lot into the market capitalization calculation for AITX. So Series G preferred stock is not publicly tradable. There are 4,350 shares authorized. As of the most recent filing, I believe there were 2,532 shares outstanding. And there were outstanding warrants for an additional 329 shares of Series F preferred stock. And what is this quote? At November 30th, 2021, there remains 46 issuable Series F preferred stock. I wasn't sure what that means. That was actually in the filing. It's not obvious to me what that means as to why that's actually different than the remaining almost 2,000 shares that are authorized but not outstanding. So I'm not sure. I will try to do another look at some point and see if I can understand why they're calling out these 46 issuable Series F preferred stock shares. But I just wanted to call it out that is there. So maybe I'm also missing something somewhere about 46 additional shares that could be issued. So these shares do not have dividends or voting rights or liquidation rights. However, they are convertible to common stock. And of those 2,532 shares that are outstanding, the CEO, Steve Reinhardt, holds about 2,450, which is about 97% of the Series F preferred stock shares that are outstanding. Now, I said they are convertible to common stock, and this is a bit complicated, but this is the quote. Each holder may, at any time and from time to time, convert all, but not less than all, and that's important, of their shares of Series F convertible preferred stock into a number of fully paid and non-assessable shares of common stock determined by multiplying the number of issued and outstanding shares of common stock of the company on the date of conversion by 3 and 45/100ths on a pro rata basis. All right. So that's a mouthful. I'm going to go through how I understand that in a moment. But effectively, what this means is that the common stock represents at most 22.5% of the company, as long as there are still Series F shares outstanding. That's at least, I think, one thing that we can say about it. However, it is even more complicated. And actually, if there are multiple shareholders of the common F stock the Series F stock as there are, that we can actually state that the common stock represents less than 22.5% of the company, meaning the market cap would be scaled even higher versus just what you see for the common stock. And I'll go through this in a moment. So here's an example conversion. Let's set up. This is close to reality, but not exactly it. And I'm gonna go through reality as best as I can in a moment. But first is a simplified version. Let's say, as I stated before, there are 2,532 Series F shares outstanding, and we'll say that Steve holds 2,450, and we'll say there's one other entity that holds the other 82 Series F preferred shares. Okay, now let's say that other entity that holds those 82 Series F preferred shares wants to convert, and let's assume that as of right now, right, there are this amount of common stock, right, the 4.7 billion shares of common stock outstanding. So I believe what the conversion looks like for if I am the person, or for that person who has the 82 other Series F preferred shares, that they then get to convert by 82 over 2532, right? That is the percent of the class of Series F shares that they hold, multiplied by the number of common stock outstanding, multiplied by 3.45. So this person who, if it was one person who owns 82 shares of the Series F preferred stock, and Steve holds 2450 of them, this person with 82 shares would, if they converted, result in about 529 million shares of common stock. Now, the interesting thing in my interpretation, and again, I am not a financial professional or lawyer, but my interpretation is that that actually reduces the number of holders of Series F preferred stock. But now, after that conversion, let's say now there is only Steve holding 2,450 shares of the Series F stock, then Steve, as the holder, still is able to convert into 3.45 times the number of shares of common stock, right? Because even though there are new shares of common stock issued by that initial conversion for the 82 shares, the remaining holders, which would be the only one person in this case, still hold the power to convert into 3.45 times the number of outstanding common stock, number of outstanding shares of common stock, even though that number is now actually greater. So that's a really important point for when I get to actually how I would convert the market cap of AITX as it currently stands. And if you think that I'm, just to sort of show that I'm not way off base, there was a conversion that we can see in the filings that happened during the 3 months ended May 31st, 2021. This shareholder converted 78 Series F preferred shares into about 316 million shares, common shares. And as a note, at the time, there were about 3.2 billion outstanding common shares at the time, right? So 78, when there were only 3.2 billion common shares, there was about 78 Series F converted into, about 316 million. So I think that is pretty close to the example math that I ran through. So just to give you a little confidence, that's not totally off. And so now let's get into the market cap, even though I am going to touch back on the Series F shares and the conversion and the impact that has. But yes, if we go through the very simple calculation for the common stock and we totally ignore those Series F shares, yes, it's about the 4.7 billion shares outstanding times the most recent closing, the most recent trade price of 1.77 cents. And that does get us to this market cap of about $84 million. However, as we said before, the common stock actually represents, as long as there are outstanding Series F shares, that common stock represents at most 22.5% of the company, meaning, this is really only a fraction of the company, a small fraction, less than half, less than a quarter, really. And so with the Series F, the one thing that I do want to call out is that the Series F, the common stock, in terms of, hey, if we have this many Series F shares outstanding, how many shares of common stock is that going to result in once those conversions are made? It is unpredictable. And that is because the order of the conversion of the shareholders of the Series F shares matters, right? And so I said this before, let's say that there's two current holders, right? Steve, and I'm using these numbers and these names because they are, let's say close to reality. Steve has 2,450, Alice has 82, right? So there's only two holders. And so we have two scenarios here, right? Either Steve converts first or Alice converts first. If Steve converts first, Steve converts his 2,450 shares out of the 2,532 that are outstanding, and he actually would receive about 15.8 billion shares of common stock because he gets, that basically 97% of the Series F gets converted, and that is 97% times 3.45 times the outstanding shares. So that's quite a lot of new shares of common stock. After that conversion, there are about 20.5 billion shares of common stock outstanding. Then now there is still Alice, who holds 82 Series F preferred shares, and that is out of the total at the time of 82, right? So Alice holds 100% of the outstanding Series F shares, and in the course of then Alice wants to convert now, and Alice now receives 3.45 times the number of shares of common stock, right? And as I just said, there are 20.5 billion shares of common stock outstanding after Steve converts. So now if Alice converts, there would be 90.5 billion shares of common stock outstanding. So if you believe that conversion could happen, then, we could say that right now at the share price of 1.77 cents, because again, this conversion could happen tomorrow. So presumably, if we have an efficient market, this should already be priced in. That would imply that AITX has a $1.6 billion market cap because, as of tomorrow, there could be 90.5 billion shares. Now, I'm going to go to this in just a moment and say why I do not think that's quite likely and what I think is more realistic. But just to sort of illustrate the opposite side, right? If instead using this exact scenario, but we just flip it so that Alice converts first. Alice converts her 82 shares first and receives only about 500 million shares. So now we go from about 4.7 to 5.2 billion shares of common stock outstanding. Then Steve converts his 2,450, which represents 100% of the Series F shares at that time, right? Since in this hypothetical example, there were only two holders to start with, Alice and Steve. So if Steve then converts, he would receive 18 billion shares of common stock. And now that means that there would be about 23.2 billion shares of common stock after all the Series F holders are converted. So that results in a market cap at 1.77 cents per share of more like $400 million. So big difference, right? This is a 4x difference in market cap, right? Is it 1.6 billion or is it 400 million? And again, I do come back to we don't actually know. This is unpredictable, because the order of the conversion matters, and we don't know in what order these are going to be converted. So that is at least one interesting bit. As I mentioned before, Steve, it says there are 2,532 shares outstanding of the Series F preferred stock, and 2,450 are held by the CEO, Steve Reinhardt. For the remainder of those 82 shares, if you read through the notes in the filing, I think either there's so it says that at one point there was like a consultant that was granted 110 shares and a debt holder that held 55 shares, and then there's a later note that says that one holder basically canceled 55 of their shares in exchange for actual debt owed to them, and then another one converted 28 shares. And so this really gets us into one of two scenarios. Either the consultant still holds 55 shares and the debt holder still holds 27 shares of the Series F stock, or the consultant holds 82 and the debt holder gave up all their 55 Series F shares. Again, this is me speculating. This is pure speculation. I speculate that it's actually it's actually scenario one, that the consultant holds 55 and the debt holder holds now 27, because what that would mean is those two notes that were a little bit opaque and didn't exactly line it up, when they said 55 of the shares for one shareholder got basically canceled in exchange for debt, and then 28 of the other holder got canceled in exchange for debt. That would be like a 50% haircut for both of those holders, right? So that would be the consultant went down from 110 to 55, and that the debt holder went down from 55 to 27. So that seemed pretty likely to me, that would have been sort of a strategy both that the company could have pursued, and that those shareholders of the Series F preferred stock might have wanted to do. So I am going to go forward here under scenario one. Again, things could be different if it actually is scenario two. And you can do the math yourself if you want. Hopefully, we'll have gone through enough detail here for you to understand that. And the one other note that I will just mention here is that the Series F preferred shares are not convertible into common stock by a holder until either August 23rd, 2023, or it says the date on which such a conversion may be required for the purpose of uplisting the company to a new stock exchange or selling more than 50% of the company's assets. So we can at least say, as I said before, I was not 100% correct in saying that, well, this could happen tomorrow, because it actually can't, right? These conversions cannot happen tomorrow. There are these provisions that were added in at some point. So these conversions can't actually happen tomorrow, but I think, the market being forward looking, I would expect this to be priced in, that this conversion is going to happen at some point, right? It is known in the ownership structure of the company that the common stock only represents 22.5% at most of the value of the company until the Series F preferred stock, there are no outstanding shares. One other thing that I found that was interesting is that the warrant holder, right? So I actually haven't even mentioned the warrant holder, which I believe would be even a different person than the consultant and the debt holder that are referenced in the filing. That warrant holder, and sorry, I used the male here. I said his. That person. Oh no, that was in their filing. Never mind. I copied that, I believe, out of theirs. So must be man. That he cannot. He agreed not to exercise his warrant privileges on his remaining 329 warrant shares before September 1st, 2023, which I thought was interesting. They didn't actually line these up. So the people who currently hold the Series F preferred stock could actually front run that person just slightly if they wanted to. And that's interesting. I won't go into the game theory behind that and the details, but I found that a little bit interesting. So let's go with that scenario one. We'll say that the holders are as follows. Steve Reinhardt holds 2,450. I think that part is known. And this is the part that's a little bit speculative, that the consultant, as it is represented, they're called in the filings, holds 55, and that the lender holds 27. And that there is presumably another lender that holds warrants for 329 additional shares. So this seemed like in general, for the common stockholders, the best case order of conversion is for folks who to convert first if they have less shares, right? Because sort of as I said, it does matter what percent of the Series F shares are being converted at any given time. So it's better if we have the smaller holders convert first because those are small percentages, and then Steve holding such a large amount being the last person to convert because he effectively already holds nearly 100% of the shares, right? Well above 90%. For him to eventually get down to holding 100% of the shares and convert actually doesn't create that much more shares of common stock, as opposed to if he was the first to convert. That would create quite a lot of common stock, and now the people who only held 1% or 2% of the Series F shares now hold 20% or 50%, right? They hold, I didn't do the exact numbers, but is much larger than the single digit percentages that they hold today. So if this is sort of reasonable case where we assume Steve converts last and that the other conversions are done sort of in order, in terms of smallest to largest holdings in terms of number of Series F shares, the lender would convert 27, the consultant would convert 55, the warrants, if we assume they get exercised altogether, and let me put an asterisk in that, and that those 329 Series F shares then get converted, and then Steve converts, that all results in about 33.1 billion shares. And so this is my basis for actually saying I think a reasonable market cap of AITX right now is $585 million at the current share price of 1.77 cents. That is that's sort of what I am using when I am valuing the company, or when I'm comparing what I would value the company at with what I believe, what the share price is telling me the value is, and whether I think that creates is a good or bad deal. Just as one other thing to note, there are those 5 billion shares that are authorized. I think there's a purchase agreement already in place, to dilute down to pretty close to that 5 billion. So if we just said, hey, if the remaining shares of common stock issued so that there are 5 billion outstanding shares, that would, using sort of the same math that I just did in the prior slide, that would get you to about 35 billion, fully diluted shares of common stock after all the Series F holders have converted. And if AITX maintained the current market cap, as I sort of computed, of about 595 million, that would imply that after those shares are issued, that there would be a share price of about 1.68 cents. So that is what I wanted to cover today, and that is my basis for why I believe the market cap of AITX is actually $585 million right now, not the $84 million that you see on some of the financial websites online. So thank you for watching today. I know that was probably pretty detailed in the math. Feel free to ask any questions in the comments. If you have them, I'd be happy to answer.